Welcome to the Invest with Rules end of week market update. I'm Scott Bennett with the great Mike Olafson. We have a lot to cover. Let's go over some of the big topics in this video. We're going to cover the Fear and Greed Index. We're going to cover some of our moves that we made over the past week, week and a half. We're going to cover the market. We're going to cover a lot of trends. Mike, are you ready to dive in? We have a lot to cover. Here we go.
Let's do it.
Let's do it. So we have the bull and the bear. There's a lot of emotions coming out this week. We have totally felt it in our newsletter, in our advisory practice. So we very much follow our process, which we'll dive into in this video. And before we do that, world's quickest disclosure, this is just information. It is not a direct solicitation to go buy or sell anything. Please always manage your rules, always manage your risk, manage your plan. We greatly care about you. We want you to do extraordinarily well and specifically manage risk when things get wild. Let's dive in. You know the dance. Mike, we're going to start with you, if you don't mind. The CNN Fear and Greed Index. What is it telling us? What is it just at a high level? And why is it kind of an interesting topic?
Yeah, it is super interesting. We came across this over the last couple of months and decided to share it with you all just as a good information point. Essentially, this is really a contrarian index in a way. It's made up of about seven indicator points. We list those on the left-hand side. And CNN basically crunches the numbers, comes up with a score each week for where the index is at. And so basically anything from 0 to 25 is considered extreme fear. And then, of course, on the flip side, you get over 75, you're at extreme greed. And today, as of this morning, it's at a 21, just touching the extreme fear. Also, if you look in the right-hand side, you'll see where it's been over the last month, last year. So a year ago, back last November, we were at a greed 60. And last month, we were at a fear 31, and we're touching into extreme fear. And to your point from a few minutes ago, Scott, we're feeling it from folks we talk to, no doubt about it. And then lastly, I'll flip it back to you in a second, but the chart below charts it out for the last year, and you could see since July peaking out at touching extreme greed, it's been drifting down in from greed, neutral fear, and now extreme fear. So it's kind of interesting to see. And I guess the theory is, Scott, that as a contrarian index or indicator, that you could kind of say that things are almost becoming to the point now there are potential bottoming and buying opportunities being contrarian. What's your take?
A few videos ago, which you can go back in the archives, thank you for being a member, we talked about how some of the top largest companies are really holding the market up. And underneath the median of the S&P 500 were down in the neighborhood of 15% plus from their 52-week highs. And there's actually a large majority that were down even further than 15%. So then the next question is that you've seen things like, I don't know, the quantum stocks or Bitcoin and Bitcoin related stocks. They have gotten hit really, really hard. So the question then is like, okay, well, you have the Magnificent Seven, which have, I mean, they're just a few points from their all-time highs, and everything else that was getting hit underneath the surface, like small and mid caps. And the question is are small mid caps and the breadth going to work, which we're going to look at market breadth in a second, or is there just kind of a big hard pullback? And we definitely saw that hard pullback yesterday. And today you saw that this morning, and maybe there's a little bit of capitulation because if you think about it, like I work with investors for decades now, and you kind of go down this kind of dark path. If without rules, without these vegetables, without having a process, you start to think like, oh gosh, like there's going to be some hard crash and I'm going to be destitute and what do I do? And in reality, they are tickers. They are moving tickers that can be extraordinarily volatile. So that's why we have a process around it. But our brains take us to a very dark place very quickly, and that is what's on display yesterday and the extreme fear. And it's not terribly shocking that we've seen some rotation happening to more safer sectors, which we'll look at. And that's my synopsis. Let's keep moving if that's cool with you.
Yeah, yeah.
Here are some slides. If you're a member, just go in the members area under market updates and you can get all those additional slides. I just zoom through.
Yep.
But despite how we feel, the stock market is an 8 out of 10. I know it doesn't feel like it, but it is. And so far this morning, the market is recovering from this morning's lows. And it's currently, this morning was on a coast, and it very likely could end the day on a gas signal. But we're looking at that really closely. So you're in this decision point. The last time you were at this decision point was this kind of nasty day, which we saw over here, which was kind of some shock waves with some regional banks and a few other issues. And then you saw last Friday, which we're going to zoom in a second. But in general, you're seeing, we'll go through our exposures and everything, but this is a market surge chart. We are customers. That's the 21-day exponential, which it sliced through. The red is the 50-day simple moving average, which it is hanging on by a thread. And then down here in black is the 200-day simple moving average. So I'd say the things that stick out before I turn back to you, Mike, is this is your first higher low. That's not a good sign. So we're just trying to take evidence and we have a math-based process to follow trends. That's not good. And this is last Friday, which was a very kind of a, again, nasty morning, great recovery in the afternoon. You almost got down there, but didn't. So I would say this is a very big line in the sand. And then this, you can see it over here in October. This is your next line in the sand. So the market is really just a few points from all-time highs, but we feel miserable. And that's why we've definitely lowered our exposure and we've rotated a lot too. Okay, I've gone for a while, Mike. What's your thoughts on the market before we go to the gauges?
Yeah, I'll just say it ties back into that conversation 5 minutes ago about the fear and greed index, where it feels really scary. And it could get really scary. And who knows, that index could continue to dive into extreme fear if the market should break below last Friday's lows, as you're pointing out here, from a simple chart construction standpoint. So, yeah, we'll certainly watch it.
What do you see on the gauges, if you don't mind going through the top part?
Yeah, so the four gauges we show, the first one is the stock market score, we just talked about. The second one is our percent invested. So we definitely did. We hit some stops yesterday and ended up going from the 80s to the 70s as far as percent invested. By the way, I will point out we did put on a small hedge on small caps, an inverse ETF, and that essentially further takes our net invested, which this gauge is showing, down to 73.7. Next is portfolio beta, essentially how our portfolio is moving relative to the market. Then the last is portfolio heat. This is the one I look at super closely multiple times a day. Basically, should all of our stops get hit over the next, let's call it day, couple of days of trading, we'll lose approximately 3% of our portfolio value. Not fun, not great, but this is how we monitor risk. And if you recall from last, I believe Friday, and definitely this past Wednesday, we were kind of in the middle of that orange yellow range. Now we're eking our way towards that green at 3%, meaning that we're kind of, stops are kind of getting squeezed. So the next couple of weeks should be super interesting to see if we end up going further into cash or flip back to getting invested further again. Thoughts, or you want to kind of dive into the sector strength?
Yeah, so this is a look at 14 days relative strength index, and anything to the right is really strong and acting as your leaders. Anything off to the left is acting as your laggards, your weakness. And we have a lot of exposure here, but it's healthcare and it's energy and it's international. And you're now seeing a lot more coasts show up. There is some life. Obviously, gold's getting hit today, financials getting hit, but they're still on gas signals, short-term, long-term uptrends, and utilities as well. It's definitely a lower volatility index. But I would say things moving to the right, energy, international, industrials on a coast, or we have a half position. In full disclosure, we have some exposure all over the place, but energy, so we have like Valero, we have healthcare, so we have biotechs and healthcare ETF. But you can kind of see how utilities are really sinking to the left, gold really sinking to the left. We've taken half of that position down. And then the mega caps, there's a couple left in green and a lot more showing up in the yellow and in the kind of that pink red color. So we're really watching that closely. So some of the big caps are getting hit, and you can see as this morning they're really getting hit. Any comments before we keep rolling along?
I'll just point out Bitcoin is a IBIT as we're showing it. is a classic example why we do what we do. Where Bitcoin was rocketing, and as memory serves, 20 plus percent year to date gains, and we took it off. We had a full position and took it off as it started to decay. And now, as of at least yesterday's close, Bitcoin is has given back most of its 2025 gains and is down to being up about 3 or 4% for the year. So that's why we do what we do, because we don't want to sit there and take a 20 plus percent gain and ride it down to single digits or to negative.
Yeah, good point. Yeah, following the process. So our process, very simply with stocks, it's we have kind of the universe of stocks. We go for what are the largest funds that we track that report monthly, what are they buying? We do a cut for liquidity, a cut for earnings growth, a cut for multi-time frame momentum, and then we put it through our trend roadmap. And our trend roadmap also shares with us a lot of ETFs because ETFs are really important in this market of how to diversify and catch up trends. So if I look at what's going on, this is our November $1 billion fund manager report. The report gets updated monthly, and the rank over here gets updated daily. So I hope that's clear for members. If you have questions, reach out and ask. But we share with where it started the month. Anything in gray, in full disclosure, we own. So we're not trying to push our book in any capacity, but this is what we own. We just want to share it with you. So today was a tough morning, but oh boy, look at Micron. So there's some strength there. I assume institutions are still interested in that. But if you go to the top right, it's not as bad as it appears. The our list of stocks that the funds were buying it's not the Magnificent Seven. It's not everything. So it was kind of more of a flat morning, which is a good sign when the market was down significantly. And this was kind of some of our growth stocks, which tend to show up here. It was kind of a flat day, negative 0.12%. There are 39 gas signals, so short term, long term uptrends. There are 6 U turn signals, so the short term is up, but the long term is still down. And you're starting to see the coasts and the brakes pile up, which is it's not good to see a pile up on the highway. You're stuck in traffic. So we've done some kind of rotating and some de-risking, but you can kind of see where we're at. And some of this is real cream of the crop. I mean, far outpacing the S&P, some of these tickers. So Mike, what say you about what's the report showing today?
I think the amount of coasts are really significant in that a coast generally means it's a ticker pausing. And is it pausing on a continued uptrend, or is it pausing before it rolls over and goes to break? That really is the question. But I think the fact that the coasts are increasing is a significant situation with the market.
Yeah. What are your thoughts on the ETF list? So I'm sharing the top 10. There's about 83 on the list. What are your thoughts on the top 10?
So first off, just to kind of reiterate what you said, anything gray on the left-hand side showing the tickers is something that we have a position in, and you could kind of see what's going on with the top 10 that we're showing. You've got lithium that's rocketed to the top over the last couple of days. It's a small pullback today. Precious metals that kind of pulled back over the last few weeks, but then resurged this week, having a pause or pullback today. Overall, the entire list of about 80, I think it's 84 ETFs that we track, down as of us pulling the screenshot, about 0.46, let's call it 0.5%. So relatively in line with the market. So kind of what you'd expect. And I guess last comment I'll make before flipping back to you is you still have 35 gases out of the 84 tickers. That's significant. But also the coast, kind of like the same comment we made about the $1 billion fund manager list. The coasts are kind of piling up, showing that pause. And do these tickers continue up, or do they roll, or some of each? So what are your thoughts?
Yeah, I'd say very clearly the leaders at the moment in our multi-time frame momentum model are it's commodities. That's fun. I put my thumb up and it made a thumbs up here. It's commodities. Thanks, Zoom. It's international and it's healthcare. So I want to be crystal clear. That's where the rotation is happening. So I hope you can see it. Our watch list is like one of those Western movies where you see like the tumbleweed kind of roll across the screen. It's really barren. So the top 5 stocks that are on our $1 billion fund manager report that are in short-term, long-term uptrends where the risk is appropriate, it's not too extended. we're being really cautious here given our exposure, but you'll see it's Pod, Insulet, an insulin device maker, Boston Scientific, which is a medical device maker primarily around the heart. And then I'm not sure why the name's not showing, thanks Google, but it's Hershey's, chocolate and entertainment. So that should tell you something. Chocolate and healthcare. And
And Scott, I will point out that even though the market has recovered from this morning's lows, as we're actually filming this, it's interesting. The watch list is exactly the same. Oftentimes the watch list will kind of move around, but the watch list is exactly the same with those three tickers. So super interesting.
yeah, so I guess isn't like dark chocolates good for the heart?
Supposedly, I've actually, isn't it antioxidant? I don't know. I think it is supposed to be better. It's certainly better than milk chocolate, from what I've heard.
Yeah, maybe if you're using Insulet's product, maybe don't. But I'm
Yeah.
trying to find the common theme. We're going to move to the NASDAQ 100. In full and fair disclosure, we sold half yesterday. It has been a great run. It was a 20+% mover since the April. We got our trigger April 20 something, somewhere right in here.
Yeah.
And we started piling into the Qs, piling into SPMO, and it's been a great run and very sim. I always say simply, very simply. Why do I say that? It's like that's my verbiage tick. Sorry for that. Caught myself. Fun stuff, right? So
I'm
we
coughing. You've got the, yeah, there you go. So we're having fun on a Friday. There you go.
we took half down. It's that's what we do. That's our process. It's now in a short-term downtrend. This is now would be day two today. And the long-term trend is still fine. We have a half position on, a half position off, banked. That's fun. We had a great gain. If this market falls apart, we'll sell the other half. If this market rip roars back because there's euphoria and government spending and who knows what else, then we can add it back. It's really easy. It's a ticker. It's a ticker that involves volatility. I'll keep pivoting because any thoughts on Qs or we'll roll.
No, let's keep rolling.
Want to share RWM?
Yeah, so with RWM, it hit a U-turn over the past week, and with the market action yesterday going into the close, we did not hit a sell signal on our half a small cap position, but because of the U-turn on RWM, the inverse of small caps, we felt it would not only help to hedge that position to allow us to try to keep it longer, but also if the market continued to decay, provide a first basis for maybe a profitable trade going inverse. So if anybody's wondering kind of why we started hedging yesterday, that's why. The signal was clearly there. And you could see from the chart action, you could see how RWM is kind of perking up over the last couple of days. And we'll see what happens. We have a really tight stop. If memory serves as we're filming this, our stop is less than 3% now. And if it doesn't work, we're out with a half position. If the market decays, we will ride this and add to it as it continues to work if it does.
And this is a trade. This is not an investment. This is not
Correct.
something you hold long term. If you go back in the time machine during tariff time, you could add a position and it kind of retests. That's kind of exactly what it just did. It jumped up, retest, and it jumped up, retested again. And then you had the explosion of volatility. And that could happen. And this will profit. It's a one times non-leveraged inverse. So it's the opposite effect of the small cap index. We are also tracking other ones as well that are more large cap or tech. We just haven't gotten our all clear signal yet. If we do, we will take that trade. This should look eerily similar to the NASDAQ, just maybe a little bit worse, if I had to say. And we have a little semiconductor half position, but we sold half. It was more of like a flat to slightly down trade. We added it more recently as it was showing extreme strength. We follow momentum and we took half down. And if so far it's up today, which is kind of nuts, it recovered all of it. But that's the Mag 7 for you. They are a very cash driven bunch of stocks. So could this kind of recover or is this the start of torture? We took half off here on the break. This would be your 50-day simple, but we're not using that. We use our own mechanisms, but it's looking not so great. So we took half down and we'll keep rolling unless you have any comments.
No, let's do it.
Want to cover Japan?
Yeah, so Japan, we added our position, what, about last week it was, if I recall, right?
Yeah, it was showing strength somewhere right in here.
Exactly. So It's on a clear gas signal. Long-term, short-term trends are lined up. It's been on its gas now for 30 days. You can go back to the mid-October timeframe. You could see where it had pulled back when the whole market, kind of everything was pulling back, showed signs of life, hit the gas signal, and you've got a small 3% gain. Not too shabby, but I guess the thesis here is international, like Scott said earlier, international is one of the strong parts of the market. Japan is part of what's leading that. What would you add to that, Scott?
It's follow the dollar. UUP is the
Yeah,
ETF. If the
yeah.
dollar's falling, you're going to see this do really well. You'll see international do well. International is outperforming the S&P 500 year to date. I know that hasn't happened in a decade. So I guess stay patient for small caps. That hasn't happened, but international is happening. There is a rotation out of the US, whether it comes to US Treasuries or US stocks, and it's moving, and that's why we're there. So we have a position on VEU, a position on international momentum, IMTM. We have a Japan position. This is a real serious trend that we're following. And the other serious trend is healthcare. This is on an overheat, and very simply, I did it again, Mike. I keep doing it. A great member called me out, and it is in my head. Overheat. It's when the RSI, relative strength index, is over 68. Most people use 70. We wanted an early trigger, 69.9. Look at this. This is great. Well, how much more could you ask for? This is where the money's hiding. This is your market surge blue buy zone. We got ours on 926 and 813. So somewhere here and then somewhere here. And we're up nicely. We've had a half position for a really long time in biotech. We added the other half and boom, off it went. We're happy. We were not adding more. It tells us to be patient, but this is where the money's hiding. We have positions in XLV, IBB. This is where the money is rotating. My comments before we go to Goldman.
Now let's keep moving.
Thoughts on Goldman?
Yeah, Goldman Sachs. So it definitely has had kind of a troublesome past couple of days, but it's on a clear gas signal, been on a gas signal for the past 3 weeks, triggered it. And this is kind of something we've talked about pretty consistently where it triggered it back at towards the end of October. And you could see on market surge, they're showing this consolidation base, this flat base. And our gas triggered right smack in the kind of the midpoint of that base, giving you like a bit of an early indication in the base before it hit the market surge blue buy zone. So it hit the buy zone. It's pulled back now. We're still within our stop parameters, our risk parameters. So we're going to continue to see what happens before, if the stop gets hit, we'll go ahead and drop the half position. If it continues to work and goes back up into that buy zone, we will likely add to create a full position.
Yeah, half position. That's the clear item is we were in here on this day. We were very happy on breakout day. That's not our buy day. That wasn't our ad day. And then if it's pulled back and it's right sitting pretty close to where we bought it. That's manage risk. It's number 20 on our billion-dollar fund manager report as of today, which will update at the end of the afternoon. And then Micron. Micron has been a great bagger for us. We're up 100%. It is number one, numero uno on our billion-dollar fund manager rank list, which is based on accumulation and multi-time frame momentum. And here's your cup, here's your handle, and boom, breakout of 128, and now you're sitting at 246, and it's even higher most likely as we're talking. Earnings are expected to be next year over 105%. So triple digit earnings acceleration in the memory chip space. So memory flash sensors. So I hope that was helpful. We are sharing in August. We got our signals. That's when we took it. We'd love to get another half position on, but we're being cautious in this tech space. Any comments on the horse of Micron?
Well, therein lies the whole topic of position sizing. Once again, topic we deep dive on a further video someday. But position sizing is key where, yes, would love to be able to build on Micron. Opportunity hasn't presented itself. However, because this is up 100+% in our portfolio, it's basically acting like a full position now. We start with a half, it's doubled. We're now with a full position essentially. So it's still having that full position effect, let's call it, on the portfolio.
Yeah, I like that. And I think this is our last one. We have Snowflake. We have a full position. And with full positions, if it remains on a coast, we will potentially look to cut in half. Our first unit is up. Our second unit's probably flat if my memory serves me right, or maybe down slightly. But this is number 60. It's been falling a little bit on our billion-dollar fund manager rank. Short term potentially could go into a downtrend, which causes us to cut. And you can kind of see how it came all the way down, kissed the 50-day simple, undercut it, and rallied. And it would not shock me if this thing rallies right back up into that blue zone for market surge. This is what the funds are going after. And as we're talking, it's 260-ish. So it's somewhere back in here. And we just watch it. So that's why we don't, as Mike said prior, we use end of day action, and we'll call them soft stops. If one has their ability to that you're super busy, then you could put your hard stops in, or you could do conditional orders, or you can do whatever you like that fits your schedule.
Yep.
But that's something that we do, and we do this for ourselves and for our own accounts and for specifically our advisory. Okay, so wait a minute. Bonus
There's
chart.
more.
Valero, any thoughts on oil? Oil's doing
Well,
really well.
yeah, you when you talked about the sector strength, you talked about energy and referenced Valero. So Valero has been a good ad for us so far. It's on a clear gas signal. It's number 8 on the billion-dollar fund manager rank, as memory serves. It's worked its way up during, since the report was first published. It's definitely up, as I recall. And we started off, I believe, gut check me here, Scott. We'd start off with a half position. When exactly? Right in that area. We brought it to a full position as it proved that it was working. And now it's kind of flirting with the IBD buy zone. And we're going to obviously mind our risk, be careful with it. We'll drop the second half position if it does flip back to a coast. But so far, so good.
Yeah, and energy can come back. Inflation can come, and these stocks will make more money. No
Yep.
different than the miners. How gold price goes up, the miners rocket too. So this is a position. The funds are there, the trend is there. Looks good. And obviously we manage risk. Okay, I'm going to pause there. So first, thank you. Our belief system at our core is we will not get run over and stay the course. That's not fun when you stay the course and you lose a third of your money. Not fun at all. So we follow the trend, we follow big money, we follow risk management rules. Thank you for being a member of Invest with Rules. Hello at investwithrules.com. If this is of interest to you and you're like, my friend, my neighbor, my family member could utilize this, just reach out to us. We want to say thank you and certainly reach out. Hello at investwithrules.com. This is all self-directed research. You internalize it, use it as you like. We do personally for ourselves, and we use it in our advisory practice. Think deep financial planning plus done for you portfolio strategies. It's not just the trend roadmap, which we share here. We have additional trend following strategies that we deploy for our clients and ourselves. That is IWR Advisors. Hello at IWRadvisors.com. Mike, final words on the Friday wrap up video. And next week, if it serves me right, I will do our ticker submissions, and hopefully the market holds up.
Quite simply, yes, we will.
Quite simply. Final words.
Thank you for being a member. Thank you for tolerating our shenanigans with coughing fits and all that kind of good stuff. But hopefully you got some good stuff out of this video. Have a great weekend. Forget out the markets if you can, and we'll see you next week.
Trade well. I hope this helped you identify some uptrends or things coming to uptrends, but please always do your due diligence, manage your risk tolerance. This is not a direct solicitation, just things for your watch list. I hope it was helpful, and I'll see you at investwithrules.com.